This episode is sponsored by Exactuals, perfecting insurance payments and the data driving them. Today, I'm lucky to have Dror Katzav, the CEO and founder of Atidot. Atidot means futures in Hebrew? Or how do you translate it?
So Atidot is like the Hebrew term for picking the right alternative in multiple futures, and probably a good translation for a company doing predictive analytics for long horizons of predictions such as life insurance.
If we already touched about Atidot, how about you'll give us a little bit of background? What is the company? What do you guys do, and why people actually care about it?
Sure. So Atidot is a company we founded in 2016. We is myself. I was part of the Israeli intelligence for about 11 years, building data solutions as a software developer, product manager, team leader, and product manager. Left the army in 2016 and very quickly teamed with Barak Berkovich, who was one of the leading technologists in my unit, to found Atidot. It's a company that is focused on bringing data solutions to an industry that could benefit from data solutions, such as the life insurance industry. Um, we founded the company in Israel. I moved to the US about 2 years ago. We raised about $9 million, and the company is focused on better understanding how policyholders use their policies and how policies behave over time to help insurance companies improve the profitability of their book of business by providing better service to the customer, as well as reducing the risk, rethinking pricing, distribution strategy, and so on and so forth.
Okay, so that's like a very high level introduction into what you do. So, let's jump into, let's call it the small questions, or let's have the details. Why life insurance companies care about it?
So I think life insurance generally is the type of industry where for years they were very much focused on how they get customers onboarded. And once you get a customer onboarded, interest rate and just the nature of the economy is basically compensating on anything you do. But the thing that started happening in 2008 and became more and more prominent is that interest rate is low and customer expectation is different. Therefore, the biggest asset that the insurance company have, the customer base, is not being managed as it could have been. And if you have better ability to understand the policy and the policyholder, you can provide a customer better alignment to the product, usually in the form of upsell, cross-sell, retention, rethinking different options in the policy, reevaluating the profitability of the policy, and so on and so forth, as well as rethinking the strategy of the company. How do I think about pricing? How do I think about the type of distribution I work with? How do I improve the lifetime value? How do I better match assets and liabilities, and so on and so forth? Um, and this becomes a data challenge now because you have much more data about a customer. You have the ability to get data from a lot of different sources, and bringing all this data in, is a data science exercise. And the products we build bring this data in, rethink about data, rethink about a model, rethink about the way the consumer behavior could be modeled to improve the way insurance companies are making decisions.
Now, I'm sure that someone who is a COO, head of business unit, or a product going like, oh, LTV? And he's like jumping up and down. Tell me more. So what's the significance of the LTV? How, especially in life insurance? And later on, I would love to hear your opinion. It's like, what's the difference between the value that you're providing for life versus other folks that are working in the P&C area? What's the magic that you're providing for the LTV?
So I think the gist of it is that insurance companies always thought about it in a product mindset. So I'm selling term life insurance. So this is the amount of money that I'm going to make from term life. Therefore, this is the amount of money I'm willing to spend on getting customers onboarded or paying commission or underwriting customers and so on and so forth. When you change the perspective to a consumer perspective, you get a much more holistic view. First, because customers don't understand the product, so they might not be as excited about the features as you are. And second, because you can change the perspective to something more holistic. So, for example, if a customer buys a term life insurance and then 8 years later convert a policy to a whole life product or to a universal life product, the lifetime value, your relationship with the customer, worth significantly more than that small price, low price, small face amount policy that you sold to begin with. Therefore, if you know effectively how to bring the customer in, provide a good service, then convert them customer to a higher value product, you can rethink about how much you're willing to spend along the way and how much are you willing to spend on retaining the customer and providing good service to the customer and improving the lifetime value by doing so.
So the challenge, that basically what you're telling me is that because those products in the organization are belong to different business units or different VPs, they don't see that. They measure it. It's like, oh, I had the customer only for 8 years on term life, and that's it. I lost him. He just, well, I don't want to use the language here, but I have bad numbers, not the best numbers on my book because this is the expense and those are the ratios because of that customer.
So yeah, a lot of the thinking process today is a good analogy would be a manufacturing. It would be manufacturing. Insurance company thinks about himself as a manufacturer. I produced X amount term life policies, and those needs to be shipped out of the building with this distribution partner. But essentially, what you're providing is not a product; it's a service, and this component that is called service is usually kind of overlooked. Used to be overlooked with insurance companies because the thesis was you buy the policy, you pay for it for life, and that's it. But if you stop paying for the policy for life because people are more financially aware than they used to be, and people expect different level of service because Amazon, Spotify, Netflix, YouTube taught us that we could have different level of service. Um, then this model starts breaking. You expect different level of service from the company. You're not looking at the company as it's not. You can think about it like the difference between Target and Amazon. Like you go to Target, you buy stuff that is being manufactured, and it's there. But if you go to Amazon and you pay Amazon significantly more, you pay Amazon, you pay for Prime, you get almost anything you want from Amazon, and you don't think about them the same way, although they're both manufacturing product, distributing products, and you go and buy goods with. Um, and I think that the difference is that insurance companies are still thinking about themselves like Target think about themselves. Like we have a production line that produces policies. We need to find distribution partners. They're going to be shipping the products out of the house, and then I don't care who bought them and why customers bought them, as long as somebody bought them.
I'm not sure that they are
And
actually manufacturing anything. But so the analogy, I get your analogy. Who cares in the organization about the holistic? Is that only in the C level? Is that only the COO or the CEO that will say, basically, you were with term life for 8 years. It looks bad for if you just look at the product, but the cost of acquisition for the whole life was almost zero. So as a bigger view, as that holistic view, actually we are in a better shape. So is that the challenge, or how do you help them to see that view and it's not only from the C-suite?
so you're right. Most of the people that currently see the value are in the C-suite. But the beauty of a product like ours is that it used to be a C-level consulting gig. You bring in McKinsey or BCG or Milliman or somebody, ran an analysis on your business and said, this is the holistic strategy. And this is a pitch to the CFO, head of line of business, CEO, head of risk, etc. And then drill that down to actions takes forever and actually never happens. The beauty of bringing all of that into a software product is that you can meet all the different layers in between. So I can sell the chief distribution a distribution strategy dashboard or report that gives them their metrics, their benchmark performance, where they want to be, what's the projection, what the gaps are, how can I slice and dice it. And it's being sold as I'll show you where the problem is and I show you how to fix it. And then the how to fix it then can boil down to the level of I can push leads into your CRM. So I can bridge all the layers in between of, you get the chief distribution strategy analytics. Your middle level gets, the details. They can slice and dice the data. They can look at different reports. They can look at different metrics. And the production floor people can actually get recommendations in real time, informing about specific policyholders.
How different are you, or what's the difference between the challenges that life insurance faces and the P&C?
So the life insurance industry have a different perspective on the customer. On P&C, you renew the contract every year. You have an implemented touch point. The customer can leave, the customer can stay. You can rethink pricing, you can rethink the risk, you can rethink the engagement with the customer. On life insurance, you don't have this. Like, you underwrite a customer once and you're stuck with the customer for life.
That's what you wish for.
That's what at least you wish for. In some cases, it's a blessing, and in some cases, it's a curse. But you're stuck with the customer for life, and now the thinking and the strategy is significantly different. Also, the data is different. From a data perspective, you're looking at longer horizons with limited touch points, while on P&C, you look at much more frequent data. So the data is different, the modeling is different, but from a product perspective, the type of insights are naturally, the type of insights any business should have. It's just that turning a life insurance company to be a data-driven business is significantly different than the challenges that P&C companies have because they do need to rethink the strategy every year when they renew the policy.
So how did you end up, or why did you take the direction of Atidot to life and not P&C? Because it seems to me that within P&C, you'll have the car, you'll have the commercial, you have the personal lines. Why life?
So I'm coming from a unit in the army that kind of like wrote on their headline, try to make the impossible possible. And the type of areas where I'm coming from, basically the way I was brought up is my unit used to get every year from the government, the 10 biggest objectives that the government is trying to fulfill that year from a data perspective, from an intelligence perspective, from an operations perspective. And those goals usually were quite random. It's like what's going to happen in Iran post nuclear deal? What's going on in Syria? How do we deal with this? And it was our task, the level of the product managers in this unit, to figure out how do we answer this question with data, with technology, with operation, with the right units, and so on and so forth. And with this mindset, we usually got the hardest or the least explainable tasks that the government had. Like, if this was like, how do I protect this line in the border? It's quite straightforward, and many armies do that. But what's going to happen in Iran? Nobody knows. So having this thinking process of how you kind of bang your head against the wall until it breaks is the attitude that we brought into starting the business. And then we were looking at the areas where basically everybody told us that's a question nobody knows how to answer, and that's what got us intrigued. So we spoke to people and they said, look, PNC, there are a lot of companies doing a lot of stuff. It's probably something that somebody would solve. Life insurance, nobody touches that. That's a hot potato. We don't know what to do with that. So we said, okay, so that's interesting.
So, let's go to the unbeaten path. Where there is a challenge, we'll be alone. It's easier competition. Forget the fact that no one really knows how to solve it. We'll figure it out. Such a classic thing. Yeah, I think I think I had Tomer from Women Insurance that you guys were together at Talpiot. You, who is the senior guy? Was he like 2 years or 3 years before you, or the other way?
That way. I was there before him. But there was a bunch of other ex
Ex
Talpiot
Talpiot.
that are now leading InsurTech companies. The CEO of some of the senior level at Earnix are Talpiot grads, and Sayata are Talpiot grads, and Voom are Talpiot grads, and there are a bunch of other guys, around the industry that are coming from my unit.
Just to
Mobileye.
clarify, yeah, just to clarify, Talpiot, it's like it's the Israeli DARPA in a sense that you after high school, instead of just going to school, they put you on a special academic cruise. Or why am I explaining that? Hey, you were there.
No,
I was like,
I like see you, moving uncomfortably in your chair there.
that's why I'm
But
standing.
the way I usually explain this is like we do bachelor degree in physics and math, and we do basic training with all the different branches in the army, and then you serve as R&D officer, having both the practical background and the practical experience and the academical background. So practically, it's like you fire a tank, you understand how firing a tank works from the physics perspective, and then you can develop the next version of the tank, and take the same analogy to each and every part of the army. So that's basically the thesis, and then you serve about 9 to 10 years in different areas of the army, trying to overcome some of those challenges that the army has that are considered unsolvable.
Which is super exciting and super interesting. I think that only pilots also serve like 10 years. And that would be, I think that we can move on from this topic. Yeah. I love it because it's super interesting. I just wonder if people, if people will find it as interesting. Are you a COVID data aficionado? Are you following that? Or you don't care?
I followed that at the early days, like trying to understand where the wind is blowing. I think nowadays we kind of understand where it's going. Now it's mostly people are tracking the vaccine distribution and how does that look like, and so on and so forth. What is interesting to see is the difference between Israel and the US. Like we see here Israel, we see the US, and we see Israeli expats, and how different segments here get this anomaly. The Israeli expat especially get this anomaly of in Israel they distribute vaccines and here they not, and now here they do, and in Israel they're not, and people are getting weird emotions about that. Here we're quarantining and then they're not, and then they're quarantining and here we're not. So it was very interesting to see that reaction.
At the beginning, I was very fascinated about the data and how things pop. And then you always ask yourself, what's not reported, what's the margin of error about the data that we actually see, and how accurate can we learn from that? Because it was left and right, and frankly, I stopped looking at that. Now it's more about the vaccination rollout, new strains, and what does it mean for me to make sure that I don't need to use Instacart anymore. Because with all due respect to a good idea and a good service, good idea, really bad service. And I cannot think about one that I received, the order as it was actually ordered. But that's my little rant about that.
The upside of living in Palo Alto is that for every random thing that you think about, there is somebody developing an app doing this. So you literally can spend this year without leaving your house and get everything delivered to your house, every service being provided to you digitally. It's amazing.
Don't you
But I
find
know
it?
it's something that most of the population doesn't necessarily experience.
And that's something very interesting about Palo Alto and that area, because on one side, they're developing all the services that you don't need to leave your house and you can be efficient. At the same time, it's all about, it used to be running, then biking, then triathlon. Now, then it was the mountain climbing. I don't know what it's nowadays. What's the latest hype? Most likely I don't know, CrossFit, so or staying at home. So it's all geared towards stay at home, but you need to be outside. So there is a little bit of a conflict there between what they pitch, what they do, and what they actually develop.
I think from my perspective, the upside of this area is that everything is within an arm's reach, including like go out and hike in the nature. It's like 20 minutes drive, you're in the forest. Um, and on the same note, it's not living in a packed city. You're living in kind of a suburban area. You can have like a decent backyard for the kids to play in, and and all those facilities. So that was from our perspective why we liked spending COVID time around here.
So let me take you back and talk about insurance. So 2 years ago, you moved to the US, you started to work, and I think it was after you landed the first or the second main carrier that you worked with. Where do you guys stand today in terms of companies that you work with?
So one of the reasons to move here was that we are working extensively with Pacific Life and Guardian Life, Farm Bureau, iPipeline, and a few other carriers. Um, and especially what's interesting is the relationship we have with iPipeline, because iPipeline, uh, they are probably the most dominant AMS platform in the US, and they see vast majority of data that of policies being purchased at the point of sale. Um, and the relationship we developed with iPipeline gives us access to this data to run models on top of that. And those models provide super valuable insight to companies, not just on their performance, but also on their benchmark performance. So this gives us access to each and every company's data, as long as they work with distributors that use the iPipeline solution for some of their processing. Um, and we see this data and we can give insights to companies not just about how they perform, but how their peers perform. So we can tell you as an insurance company, you saw certain growth. Let's say, you grew your term product, your term sales from, X, Y, maybe 5% growth, which is, nice and exciting, and it's projected to continue to grow, etc., etc. But everybody else that work with the same distributors on the same market segments with the same products saw 15% growth. So we actually left 10% on the table there. And we can quantify this 10% in premium and show you that this 10% is maybe like 5, 10, 20, $30 million premium that you left on the table just by not growing fast enough. And you can drill down to who are those distributors where you were exposed to this phenomena. Like, here are the distributors, and we like to break it down like the electoral map. Those are the ones that um, are small, or that are either small market share for you, as well as declining. They're not growing as fast as you want them to be. So those going to be like your red states. So those red states here are going to be the ones that you're probably not going to win with. So maybe not worth paying attention to. Those are the ones that are big and growing. Those are the ones let's call them the blue states, since we're now living in a blue state and in a blue country. Um, so those are the ones where you already won. You don't need to spend some time there. And those are the two others. That's going to be your swing states, the one that were big but declining. So somebody is sneaking in, or the ones that were small but you're growing, the ones that are now just starting to like you, and you want to put them on a path to love you and make you money. And when you're able to show the insurer not just how much they left on the table, but where they left it with, and then break it down and say, those are the one you need to pay attention to, provides a lot of value to the insurer, and then just scratch the surface. Now, the second level down is talking about operation. I can guide you through where this operation leaking. Maybe you're taking too much time to underwrite a customer. Maybe you're asking for too much medical requirements. Maybe it takes too much time to deliver the policy to the customer. Maybe the next medical requirement that you're ordering is going to cause more friction, but therefore losing the customer, losing the premium, rather than certainty about the risk. And then this gives a lot of value for distribution, operation, underwriting, then pricing and marketing, and so on and so forth across the organization. But looking on your data and everybody else's data, obviously anonymized, segmentized, and we keep the privacy of the broker and the carrier that provide the data, but in a way that will provide you insights to where you're winning and when you're losing.
So is that now integrated in a pipeline, or do they need to go to work with you? How does it work exactly?
Either way,
Okay.
it's a joint product. You can come to us and we will be, the front and center, or you can come to your iPipeline rep and they're going to be the front and center. Like, it can go either way.
So in the
But
insurance
this is
company,
literally selling like hot buns. This is like this product is literally flying off the shelves.
so in the in the insurance company, who is the person that is actually, hey, I need to call Dror to get that product?
So I can share that Pacific Life that were the first customer to buy this product, and at Pacific Life there is a weekly report being distributed to the chief distribution, chief operation, chief product, CFO, and as well as 60 other people at the organization that get this report on a weekly basis, in each and every department, to go and quantify, what's my metrics, where I need to be, what the gaps are, how do I fix it, and go and solve those challenges.
Gotcha. Now, you mentioned that you start to work with Guardian. What's going on there?
So with Guardian, it's actually very interesting. What happened with Guardian was that during the COVID era, so we and Guardian have a relationship for years. Um, what happened during COVID is that we came to a realization that it's not just how many coffee mugs you have there. It's like the third.
I have my espresso and I have my mate.
um, so with Garden, basically the realization we came to is that it's not just the insight. We give the insight, but then there is a whole another layer of operation and operating against the insight that is challenging to the companies. Um, and what we're trying to do with Guardian is taking kind of taking the next level, taking ownership on the next mile, and saying, it's not just the insight; it's also how you operate the insight. And specifically there, what we're starting to do is to take ownership on a book of business that has a significant number of policies that are, where the selling agent is no longer part of the business. So the policy is either orphan or reassigned or unassigned, but generally speaking, does not get a good service right now, and could get better service. And by providing better service based on the models, premium could be double. So it's a 2x gap in premium that could be mitigated with better customer service. And this is 2x not between what the customer have and what the customer should have, but between the part of the book that gets service to the part of the book that doesn't get service. Um, and the goal is not to just come up with insights, but also bridge that to the home office, to the distributor, to the FR or the agent at the front lines to come up with the right insight that is done both digitally as well as offline in kind of a hybrid model to fulfill the insurance gap that the customer have quickly and efficiently and in a scalable way, to come up with the insight, go and fulfill that at the front lines, give the customer what they need, and obviously improve you know the metrics of Guardian's book of business.
So it's very interesting that you are taking the front end and the back end and you position yourself with iPipeline, which is amazing because that's the window that most of the agents, the people in the trenches have into the world of insurance. Most of them don't really care what's going on in the back end or in the corporate world. The only thing that they care is like, where can I sell the next, the next policy, and let me collect my premium, and hopefully I can position it with the first carrier and not the fifth, right? Because that's usually their biggest cravings. So what's next?
The,
Yeah, sorry. Go ahead.
Yeah, no, go. What's next is basically where I'm heading. It's like, the way I'm thinking about the industry is that, um, to some extent, by taking an holistic view, like, zooming out and seeing all the different pieces of the process and seeing how the customer think about a product, think about yourself. Like, where would you go to see how good is your policy? Most of the customers don't have a tool to do that. Like, if I want to know if my policy is good for me and I understand, like, one or two things about life insurance, there is no good way to do that beyond going to the insurance company, getting the documents, running through the 600-page PDF with all this legal language and trying to understand what's there. Then either you go or you don't go to an agent to try and explain you that. But that's a very manual, process. There is no tool where you can say, okay, I'm willing to I'm willing to pay, that amount in premium, but I'm looking to do as much in tax planning and in retirement planning and in estate planning, and I need that amount for protection and so on and so forth. And how do I marry all of that together? How do I now get the right puzzle piece to match what I have? And I think this is the portion that used to be done just by, good agents. Um, but in a world like this must be a hybrid, in an industry where the agent population is aging. Um, you have to have some kind of a hybrid solution. So, all of the other insurtechs in life insurance go after the first policy that you purchase, go after the millennials, the health AQs, the later lives, go after the first policy that you purchase, which is important. But then the second segment of the market that is overlooked is what happened 10 years after. I'm a 30-year-old, I'm a 40-year-old, I'm a 50-year-old. I'm already spending, significant amount in insurance for 10, 15, 20, 25 years. How do
By
I
the
know
way,
what I have? How do I know if it's good?
no, and that's great. That's you just touched sort of a follow-up question. So far, you've been serving only incumbents insurers. Is there a place to serve the insurtechs or the new intermediaries or MGUs that are in the space? Or they are trying to be smart and do everything by themselves, or they just deal with simple products, which is term life?
So I think many of them will only start seeing the challenges in year 5, 6, 7, 8, because the first, 3, 5 years, it's a cheap product, it's sold online, it sells quickly. Usually you see most of the churn either before you buy or later on in the journey. But when you get to the more complex issues, like we deal quite a lot with post-level term issue. You bought a 10-year policy, 20-year policy, and you want to continue paying. And the insurance company now need to come up with a new offer to convert it to a different policy, to change the premium, etc., etc. And the company's challenge is that if I bump the price, I'm just going to stay with bad risk. And if I don't bump the price, I'm stuck with bad pricing. So I need to somehow figure out a way to marry premium, profit, mortality, and some other risks all together in one equation. And insurtechs didn't have to deal with that because, you bought a 10-year policy and they exist for less than 10 years. So nobody has reached the 10-year mark yet.
Most of
But
them are at
but
five-ish.
yeah, and like, the first couple of years was low volume, low numbers. So they're actually in like year 2 or 3. Um,
Ethos was
think
actually an
about
interesting, yeah. Now I'm thinking that Ethos was an interesting combination there, especially with how they managed to reach the capacity very fast and move to legal in general. But yeah, go ahead. Sorry, interrupted you.
no, this is exactly what I was about to say. Like, think about the work we do with Guardian. The amount of policies, the amount of premium that we help processing there is substantially bigger than what Lemonade had when they went to an IPO. Um, when what many of the insurtechs have when they raise crazy rounds, because we took a different route. We partnered with an insurer, with an existing insurer, instead of bringing those policies in, um, because we're looking at the other side of the pipe, not the new customers, but the one that already exists. But the policies that that we are working on Guardian's case, on Pacific Life's case, on many of the companies that we work with, processing hundreds of millions of dollars in premium, um, and helping the carriers make the decisions. So now, what falls under decisions that Health IQ need to take or Pacific Life need to take when they work with Health IQ and vice versa? There is still innovation to come there when Health IQ going to bump into those issues later in their journey.
So you raise a very interesting, very intriguing point there, and it made my ears burn, especially when you compare the number of policies that you processed, which is more than Lemonade when they went to an IPO. Now, if I was your investor or anyone else, I would go, okay, and please answer if you can or cannot. I understand that. It's a question of what's your business strategy here or your business model, because it seems to me that if you were a broker or an MGA, God forbids, you could have done much more.
So I think B2B and B2C strategies are materially different, and each one is a different profession. And Lemonade did a great job in, Lemonade and Hippo and Next, and I'm naming the Israeli examples. I can name the non-Israeli examples as well. Made a lot of, Haven Life is a quasi-Israeli.
Yeah.
Did a lot of work in building their brand and building a consumer product. We as a B2B company are more focused on the data and the processes and the analytics, working with the companies. But having said that, there is a market focused on existing portfolios. There is a lot of transactions that you see in the market, on how do you nurture existing client base, and definitely there is more to come from Atidot on that. And generally speaking, insurance is usually lagging behind, banks. So InsurTech is lagging behind fintech, and especially life lags behind PNC. So Lemonade and Hippo and everybody are doing phenomenally. But life insurance is the close follower that's gonna come next.
Fantastic. So let me take that to a personal direction now. So because we are reaching the end of our conversation today, we've been in lockdown for a year. Do you have good recommendation for a book, a life hack, or a good movie and series that you liked? And please, it doesn't need to be self-improvement book. It can be a fantasy, a historical, whatever you like.
So I'll take it in a slightly different direction. It's something I thought about earlier today. Like we all saw, like the life hacks that in order to be productive, you need to put a shirt and pants when you wake up, and not just stay in your pajamas all day. Although the office is just the other room in your house. What I thought about today was that actually I was also putting shoes every day in the last year, which was very interesting because there is no reason to wear shoes. Like, I understand the shirts and the pants, but I'm literally 10 steps from my bedroom. But I still wear, socks and shoes every day, and walk around the house with shoes, and then take them off when the day ends and move to my slippers or whatnot when I walk around the house. I think this is kind of what helps me separate where I'm working and when I'm not working.
Because let's face it, your t-shirt, it's a startup t-shirt, and that can be a sort of the pajama.
Yeah. It's
Okay.
this one is not comfortable enough to be the pajama, but my other startup shirts could be.
Yeah, I think that most of my sleeping shirts are swag, and yeah, it's funny.
I really like the plug and play one. Plug and play one is very good for workout or pajamas, or it's a
Yeah,
very
it's very
it's a very
soft.
effective shirt.
Yeah,
Yeah.
yeah, it's very soft. The purple with the plug and play here. Yeah, good job, guys. Plug and play. Good job. Love it. Dror, thank you very, very much for joining me today. It's been a pleasure.
Thank you. Thank you for having me. And always fun to talk to you. And everybody that want to reach out, you're gonna have my email and my name on probably on the post that is associated with this video.
Yes, it will.